The dollar index can help you make more money trading if you use it right. Hello, I'm James from DXY. I'm a currency trader with over 5 years of experience and a coach with 800 students globally. In this video, I'm going to show you how I use the dollar index to my advantage to make more money trading and how you can do it too. Before we get into my use of the dollar index, let's have a talk about what it is first. The dollar index is a weighted currency index showing the strength of the US dollar versus a basket of other currencies around the world. The dollar index is weighted against the euro, the Japanese yen, the Canadian dollar, the Great British pound, the Swedish krona, and the Swiss franc. The weighting is not entirely equal. Because the euro is an active currency in 19 countries, most of the weight of the DXY comes from the euro. So it's going to be more skewed towards the euro than it is against other pairs. But it can still be used to your advantage when trading against any asset class that includes the US dollar. Here's a look at the correlations that the dollar index has. At first glance, this might look quite confusing, but it's actually not. What this shows is the dollar index correlations to other pairs. So the candlestick chart you can see is the dollar index, and these other ones are Euro USD, GBP USD, NAS 100, and US 30. As you can see, there's pretty much a direct inverse correlation to the dollar index, because you can see as these all move down together, the dollar index is moving up. And as the dollar index moves down, these all move up together. Now they obviously have their own intermittent movements, but overall the direction is there, and that is what we can use to our advantage. Now that you understand what the dollar index is and how the correlations work, let me show you how I use it to my advantage to make more money in my trades. The first way that I use the dollar index to my advantage is to get an overall reference of the strength of the US dollar. In 2020, the dollar was incredibly weak, and as we can see that on the higher time frame charts on the dollar index. Now for this reference, I will generally use these weekly and daily timeframes just to understand overall which direction is the dollar heading and where is it likely to go. Now it does actually react very nicely to technical levels. As you can see here, we had this nice push up through 2018 and 2019. Then COVID happened, we went a little bit crazy and we sold off. Now when we started to break through this low, we could see there wasn't really a clear support until this demand zone down here. And you guessed it, the market did follow through into that level. So through most of 2020, it was a clear sell on the dollar index all the way through into this demand zone, which helped us to actually take a lot of trades against the dollar, because if the dollar is falling, we are then able to trade against it on pairs like GBP USD, Euro USD, and stock indexes like the US 30 and NASDAQ. So that overall directional information is very beneficial. And this year, again, if we look, through all of 2022, we've been incredibly bullish on the dollar index. What this means is we can use that as a cross correlation for other USD focused pairs like GBP USD, which is going to inversely correlate, Euro USD, which will also inversely correlate, and then the US 30 as well, which will inversely correlate. So when the dollar is showing a lot of strength, we are likely to see weakness on stock indexes and other cross USD pairs, which can help us with overall direction and help us to understand how long we can hold our trades. Okay, if we have a ranging DXY, it's going to be a little bit difficult to understand which direction GBP USD, Euro USD, for example, NZD USD, the US 30 and the NASDAQ are going to go. But if we have clear directional strength on the DXY like this, with clear targets on those higher time frames, for example, this one here, which I've been talking to my members about for a very long time, we can then anticipate the dollar is going to stay very strong for a long time. Therefore, we can trade against that on pairs like Euro USD by selling it for a long time towards correlating areas like this demand here, and GBP USD selling that, which is actually now broken into new lows. As well as using it for its overall directional strength, we can use the US dollar index for individual trades. And the way that we would do this is generally I trade the cross inverse correlated pairs. So what I would do is see if the DXY is lining up in a key area of supply or demand, and if the structure is going against the markets that I'm looking at. So let's say the US 30, right, I wanted to take a trade from this level, and I was looking to sell around this point if we broke the lows. Now the DXY could give me more confidence in this trade if it cross-correlated. So if we head over to the dollar index and look at the structure here, we can see, well, we have bullish structure overall on the dollar index here. We saw a liquidation of these lows followed by a push-up, pullback, and a retest of demand. When price pushed up to here, we can actually see it's now pushing against this efficient supply. So this is now breaking above. So we can see this as a breaker structure. If we look above, well, where's the open space? We've got this kind of almost equal high liquidity here. We have this imbalance here into this supply. So we could anticipate that the dollar index is going to be moving up. If we pair that with the overall directional bias on the high time frames, as we looked at just on the weekly and the monthly, we can anticipate the dollar index is going to push up through this open space into here. Now this is actually quite a large range. And if we go back to the US 30, we'll see here that this generally directly cross correlates. The bullish dollar index is actually a total flip of the bearish US 30. And by pushing up on the dollar index, we can use that to our advantage to understand that if the dollar has that open space to fill above and the dollar is looking strong, this stock index, which is totally cross-correlated, is then likely to be weak through some imbalance towards similar levels. So we could now look at selling the US 30 safely towards, for example, this level, and then maybe into this demand somewhere in the lows, and potentially even beyond if the dollar index broke. So what we could do is sell into this market. Let's say we're holding a short and we do get down into these levels. If the dollar index then traded into this level and pushed right into the highs, we could then see whether or not we should be holding our US 30 trade. If we just came into this zone, reacted and started to sell off, that could be a good reason for us to get out of our US 30 short and take the profits that we've already accumulated on this pair. So if we traded down into here and then the dollar index started to flip, we could get out and take profits at this area and then we'd be in for a safe trade. On the flip side, if we did push and start breaking these highs, that could then be used as our correlation and the information we need to actually hold through the lows down here. So we can use the DXY for understand whether we're in a key area to start a trade against the US dollar, and also to understand whether or not we should be holding trades or whether we could break even and maybe save ourselves a loss from understanding what the dollar index is doing. So what I'm going to do real quick is show you one example from yesterday where I managed to cut a loss and make sure I avoided that due to the actions of the dollar index. Yesterday I was in a sell trade on the US 30. The target was actually much larger than this, but the DXY told me that I was probably too early to the move and managed to get me out for break even rather than taking the full loss on this move that I really didn't need to take. So I sold the US 30 from the supply after this break of structure. Price came down a little, pulled back up, wicked through, traded it into a refined supply, then started to sell off. Now at this point I was unsure whether we should hold it if it would break through, or whether we should actually just make sure we are break even so we don't take any losses on the trade. At around this point here, the dollar index was trading at this point right here. And having seen this push down straight into this low, we could see the amount of weakness that the dollar market had. We could see then imbalance below, which would definitely lead us through at least into this level, if not even further towards that larger time frame supply. So seeing this weakness here, we can pretty much understand that this is very likely to break and push down. Now, if the dollar pushes down, what's that going to do to stock indexes? They are going to move up against the dollar index. So when I was in this trade, around this point here is the time that we started to see the DXY pushing that low. And as you can see, as soon as the dollar index pushed that low, it then broke and the US 30 rallied. So it was at this point I decided, okay, I'm going to go break even on this. Maybe it will flip down, maybe the DXY will have a reversal, but the chances are it's going to break down. Therefore, the chances are this trade is going to push up against me. So we managed to get out of this trade for break even because we understood what the DXY was doing at that time, and we understood that if it did break this low, which it was very likely to do now, it would rally the US 30 against our short position. So the dollar index here actually told me I was too early to the move and allowed me to get out for a break even instead of taking a loss on the move, which as you can see would have happened had I held it all the way out. So now you know how I use the dollar index to my advantage. I hope this video has been beneficial to you, and hopefully you can use some of these tips yourself to improve your trading by using the dollar index. If you've enjoyed this video, please do drop a like, that's going to help me with the YouTube algorithm, and make sure to check out my page because there's a lot more valuable content there that you will enjoy. I've got a free course that you can join. It's 13 videos long, it's not going to take much of your time, and I've had over 10,000 people go through this now and tell me that they had a great experience with it. So if you want to improve your trading for totally free, head over to the link in the description and join that free course. Thank you for watching, hope you enjoyed this video, and I will see you in the next one.